Hi, this is Chris Bridges coming back to you on Chat with Chris on the Credit with Chris YouTube channel. So nice to be back with you. And one of the things I wanted to talk about today, as a matter of fact, I had the opportunity to share this with thousands of people on Fox 5 Morning News. Well, we were there this morning talking about FICO scores. And if you've never heard of a FICO score or don't know what it is, FICO, quite frankly, stands for Fair Isaac Corporation. And it is a type of scoring model used most predominantly or prominently, especially in the lending communities. I'd say about 90% of the top 100 banks and financial institutions are using the FICO model. But what you may not have known is that there are a lot of other models. As a matter of fact, Equifax uses a scoring model called Beacon, and TransUnion uses a scoring model called Empirica. And then together, and of course Experian uses FICO, but together they've also come up with a scoring model that they have collaborated on called Vantage Score. So if I haven't confused you enough, what you need to understand is there are a lot of different scoring models out there, FICO being the most commonly used. And why is that important for you to understand? It's because our credit is calculated really based on information that's being provided about us by our creditors, whether it's positive or negative. We're going to focus more on the negative right now because that's what typically affects someone's credit score. Well, the information that is reported that is negative is actually calculated using different algorithms and different scoring models. So you see, this is why your score could be different depending on where you pull it, or depending on who's looking at it. So for instance, a mortgage lender may be looking at it and they're using the FICO scoring system. And so the content is the same across the board, but the way they calculate your score could be different. Or you could go into a car dealership and they may be using a different scoring system, or an insurance company, or an employer, so on and so forth. So it doesn't mean that there's a particular place that your score is right or wrong. What it means is that the way that score is calculated could be different depending on where the information is provided and which scoring model is used. So hopefully I didn't confuse you too much, but we'll talk more about the actual breakdown of how the credit bureaus and the scoring models actually calculate your score. But just as long as you know, FICO, Fair Isaac Corporation, is the most commonly used credit model. So if you're out there and you want to kind of check yourself as a consumer, you might want to go to myfico.com. Okay? Until then, this has been Chris Bridges with Chat with Chris. Again, send me all your questions so that I can answer them. No question should not be asked because I'm sure it can help someone else. So take care. Talk to you soon. Bye-bye.